All right, so what is new this week? We have seen interest rates trickle down a bit. That's because the wage numbers didn't come in quite as good as we thought, so that did help us out this week. There's also some speculation that CPI will come in a tad lower, and that might help us out with rates as well. That being said, in terms of lending, what is getting done? I feel like we're trending a little bit behind the residential market. I feel like the residential market felt the slowdown earlier because obviously rates shot way up. They were paying upwards of 7% at one point, and since then rates have gone back. So for example, we might be seeing some deals getting taken down on the 1 to 4 unit side. On the multifamily side, what I'm seeing is just like super slow activity. People are still waiting to see what pans out. I know a lot of real estate investors and investors in general like to use this quote from Warren Buffett, is to be greedy when others are fearful. That is absolutely true, but I think most people right now are not necessarily fearful. I'm sure there definitely is some fear there, but there is still some uncertainty. So most people are not ready to be greedy right now and start getting active with deals. Why? Because we anticipate that cap rates will rise a bit this year. We don't anticipate that it's going to be severe or significant, but we do anticipate the cap rates are going to rise. Financing is getting a little bit more tricky. So for example, a lot of our lenders that we could rely on, a lot of them are out of the market, but there are new lenders in the market. There are still some people lending pretty much at the same underwriting that they were previously. Other ones are kind of scaling back some. I'm hearing some rumblings about certain banks that may not be around in the next year or so. So there's been a lot of shifting around, and generally what some of our lenders have been saying, in fact, a lot of our lenders are saying, is that they're having a liquidity crisis, which means that a lot of people removed their cash from the bank. Either they spent the money or had to spend the money, or they moved their money. But I think the greater part of people are actually either losing money. Maybe they lost money in the stock market. They had to pay taxes or large bills or things like that, and the money is just not quite flowing like it was previously. So some of the small banks are having a real crisis with that, and it has impacted their ability to lend. So that's kind of what I'm seeing. Like I said, there is still financing available. It is not as super aggressive as we're used to seeing. The deals that I'm doing right now tend to be a little bit trickier. I financed a couple of boutique hotels already this year, so I'm seeing more of that kind of stuff. I am seeing a lot of people wanting to pull cash out and be ready for the opportunities when they come. The general consensus of everybody that I've been talking to is, hey, let's see how things end in Q1, and then we'll reevaluate our strategy then. So that is really what I'm seeing. I'm not seeing a lot of the flippers returning to the market. I'm seeing them underwrite deals and looking at deals, but they're not aggressively purchasing the way that they have been the last few years, and I don't anticipate we'll see that for a little while. So the general consensus is that we don't anticipate the market kind of starting to get more active again until the Fed stops raising rates. So he may opt to do that earlier in the year, or it might be later in 2023, and that's really going to affect the activity going forward, because a lot of people are locked in at very low rates. So if you're considering selling your property, but you got a really good interest rate, unless you have a serious motivation to sell, you're probably just going to wait until the market starts to improve before you decide to list your building. In the same token, underwriting is getting difficult for buyers because you can't really predict where the interest rates are going to be in the near future. So, my suggestion is if you have to buy a property, try to get into a loan that has little to no prepay, so that way you have some flexibility when rates start to come down. That is one way that maybe you could try to figure out how to buy a property now and then have the ability to refinance once rates come down. But that said, it's a little bit tricky to understand where exactly the market's going, for how long we're going to be in this sort of downward spiral. We don't anticipate that it's going to be significant, but then again, there are some forecasts that think that the market's going to improve towards the end of 2023. There are some reports that are forecasting that it's going to improve in early 2024. So it's really tough to say, but I would say that the general consensus is that commercial real estate, which includes multifamily, 5+ units, is going to have a little bit of a slow year this year, with it picking up in the later half of 2023. So that is what we're seeing. I know that a lot of buyers are on the sidelines waiting for deals. So once we start to get a feel for how long this is going to go on for, or we start to hear some confidence that we think things might be turning around soon, I believe that people are going to flock to purchasing properties, and it is going to get very competitive again. So, it's tricky to get the timing down. If you need to buy a property, I would say that it's not the worst thing in the world. It's not like you're going to lose your shirt or go bankrupt, but you are kind of in an environment where we're not as certain as to where cap rates should be right now. So that being said, if it's a long-term hold, then it really isn't such an issue. And it's certainly better than paying capital gains tax, at least if you're buying here in Southern California. I could say that with confidence. So if you have any questions about what is possible to get done on any of your properties or your strategies moving forward, I am happy to take a look at what you're doing and what you're thinking and give you a second opinion, or give you some options. Have a great week, and I will talk to you next week.